Welcome to another episode of Canopy Practice Success. I am excited to welcome Luke Frye. Luke is a CPA who's had a unique career at the intersection of accounting, startups, and firm ownership. He was the very first accountant at Bench.co, where he helped scale the company from the ground up to thousands of customers. Subsequently, Luke built his own tax practice to $500,000 in revenue without taking on any outside funding. Luke is also known for his people-first mindset, his ability to think in systems, and his deep relationships across the accounting and fintech ecosystem. We're excited to have you with us, Luke.
Thank you so much. I'm excited to be here.
Yeah. I don't even know where to start. I mean, people will have heard Bench and be like, whoa, tell us more. But then also like scaling your own thing from 0 to 500,000. Where do you want to start?
Yeah, I think it's interesting because the industry, especially with AI and tech, AI specifically, has gone through a bit of a frenzy. And it's not new in many ways, right? Just starting with QuickBooks Online was such a novel thing to be in the cloud, a remote software, right? And so we're kind of in the same inflection point. And that's what is part of my origin story is I didn't even know what a startup was when I joined Bench. And they were doing something really novel and before COVID where we were fully remote. We were all in the cloud. And it was something really ahead of its time. Unfortunately, not a great ending to the company. And, there were certainly some problems, but it was really innovative. But it was one side of the coin where you're taking on outside funding and you have less control over the company. Yeah. And one thing I really admire is having done it myself and worked with many business owners and accounting firm owners who are, I joke that they're real businesses because they have to make a profit to pay their bills, right?
I think about that all the time. My entire career has been in tech. And I even remember at our first company, the founders coming up to the company meetings and talking about how we were profitable and we had cash in the bank and how that was uncommon. Here, me as a freshly graduated undergrad, I'm like, okay, cool. We've got money. I didn't realize how uncommon that was.
Mm-hmm.
And then as I've shifted, especially hosting this podcast and talking to accountants, that has become very top of mind for me. That is one huge element that my career has not shared with other accountants' experience. I talk a lot about sometimes the things that tech really can offer to accounting, and we can't often offer profitability. It takes a while to get there when you're backed with funding, but like profitability is the goal in general, even for us at Canopy, any tech company. So, man, if you can figure that out early in your business model as an accounting firm and not have to take on funding, not have to be subject to someone else's opinions, like find a way. Yeah.
And, that's why when I started my tax practice, our focus was entirely on single member LLCs and S corporations because S corporations are what I call everyman's entity. It is the one that gives you a lot of the corporate benefits, like taxation at a lower level without FICA taxes on your distributions. And then, of course, you have to have a reasonable salary, as opposed to paying yourself full salary or self-employment, you're taxed. And that's the challenge, but it's the way our economy is set up, is labor is taxed more than capital. Capital is a preferred method in the tax code. It's treated easier and better. So that's why I loved S corporations, still love S corporations.
Yeah. Okay, so talk to us about what you've done to be a profitable firm without taking on funding, and maybe even throw in some lessons you learned from Bench that was funded and things you're like, I'm going to start or stop doing some of those things when I start my own thing.
Sure. I mean, the biggest thing you have when you don't have outside funding is control. You have full control, but then you are at the mercy of your revenue, right?
Yeah.
And so I won't sugarcoat the fact that I had some savings and I burned through that way faster than I thought I was going to. And so then I used credit cards, and that came with other very big problems later down the line that thankfully are resolved now. If you can start something on the side and then grow it to a point where you can take the leap, awesome. Single, no kids, so it's really easy for me to take risks. Whereas if I had a family and kids, that's a different story. So I had the luxury of being able to do that. The amazing thing about working at a venture-backed company like Bench or even Pilot and Puzzle, you can hire brand people, marketing people, sales people, all these people who help really create something beautiful and cool that when you're starting from the ground up, you're just hustling,
Yeah.
and that's what I did. Living in Vancouver, BC, my business partner is American and she had to go back to the US. So we both moved to Seattle together, a city we never lived in. And we're like, hey, we just showed up, but we're going to start a practice here. And I just did all the old school networking tactics. So if you compare and contrast Bench in the golden days of Facebook ads, they were just dumping tens of millions of dollars into Facebook
Yeah.
ads.
Yeah.
And it drove their growth, but I didn't have that luxury. So what did I do? I joined chambers of commerce. The GSBA was amazing. I joined every BNI group. I taught classes at camera stores in way to get my name in front of photographers because that was one of our niches. I did all this networking, old school networking that didn't cost me anything but my time to make connections. I still ran everything pretty virtually as far as like client meetings and that sort of a thing. But getting a handshake and looking people in the
Yeah.
eye goes a long way.
It really does. Even in 2026, like it can't be understated that human connection is a powerful influencer in decision making.
Mm-hmm.
I love that you said you just, went and boots on the ground, figured it out.
Mm-hmm.
So you're a few years in. It took you 4 years total to get to.
Yeah, it was a little over 4 years and then got it to $500,000 of recurring revenue. The first year, it was a month, it was $600. And I think then it was like, I'm actually blanking on some of the numbers, somewhere between 30 and 80,000. So not enough for two people to be living on. And then year 3 is when things really started to
I
click,
was just
right?
gonna ask, where was the tipping point, and
Hmm.
what do you feel like got you past the chasm?
Yeah. I love this question because I'm a huge Jim Collins fan who wrote Good to Great. And I'm reading his current
That one
one.
is so good.
A classic. If you haven't read it, everyone should read it.
Yes.
It should be the first book everyone reads in business school. And so I'm working on his Beyond Entrepreneurship 2.0, and he is referencing again flywheels. So
Mhm.
the way the flywheel works is, was it me going to the networking event? Was it me following up on emails? Was it me having a pretty website? Was it me teaching courses or going to conferences? Like, what is the one thing that got me there? I don't think there is a one thing. It's all of those things together. As a firm owner, especially starting out, we get overwhelmed by the amount of marketing tactics that are
Mm,
out there, whether it's getting on a podcast, whether I, paid for ads, whether I'm cold calling. I personally hate cold calling. There's
me
something
too.
you know, but I know people who love it. So I'm a big fan of understanding your personality, both from a Myers-Briggs personality. I'm an ENFPT, and then also your Clifton strengths.
I'm a Clifton Strengths girly. I love it so much.
Yeah, what does that say? It says, depending on your strengths, different things are going to be easier and better for you. So focus on your strengths. We were raised with a liberal education that I do admire. I'm so glad I had music. I'm so glad I had sports, all of it. But at the end of the day, we shouldn't be perfect at everything. We should really embrace what we're excellent at and just go for it.
Double click on that. Um, we've read, when I say we, my husband and I, several of Clifton books. We've read the marriage one, the parent one, leadership. I just love the concept of leaning into your strengths. And then
Mm,
especially when it comes to like hiring, and I
mm,
don't know how much you use that one finding your co-founder, if it just kind of clicked. Like having someone who's a complement, knowing your strengths versus their strengths.
mm-hmm.
Um and delegation. I love that you're reading, is it Entrepreneurship 2.0? Is that,
Yeah.
I talk about entrepreneur problems in general on this podcast a lot because it like your accountants, that's their expertise, but there's still all of these other things. So I thank you
Mm.
for reminding me of From Good to Great. It's been too long
Oh,
since I've read
so
that. I don't know if you caught my reference, but to Crossing the Chasm,
mm,
another good one. But yeah, so you talked about the flywheel, and it's just all of those little things that you feel like finally
mm-hmm.
pushed you over the edge in year 3.
Yeah, exactly.
What are the systems, the rhythms that like
Mm,
it's like, okay, now like it's muscle memory. I can just
yeah.
keep on going and it's not like a slog to be like, oh, I
Yeah.
gotta go to this class or I've got to go find a new thing. I've got to.
Mhm.
Yeah, I'd love to hear more about your systems.
Interesting. Systems in the sense of automation or just like
A little bit
what
of that, or even just like your rhythm. Like,
Mhm.
do you have cadences? Do you have a weekly, monthly, quarterly
Mm.
task that you do to make sure that the business just moves forward smoothly?
I wish I was that thoughtful. I think it was more in survival mode at the beginning, and then it was a lot of catching up to do.
Totally.
But, we certainly had cycles and seasons, right? I think as an accountant who is extroverted, you have such a superpower for sales. And if you're an accountant starting a firm, the number one thing you can do is be available March 1st to April 15th. You will win so many clients by doing that. Uh, most firms are full right now. They're not taking new clients. And so if you're available and ready when people need you the most, obviously those
So
are
tax
sometimes
season is not a bad time to start your firm?
it's a perfect time to start a firm. Yeah. If you're going from zero,
Right,
right?
right, right,
And
right. Yeah,
hope
start your firm.
yeah, hopefully you're not, also doing a tax season for someone else, but crazier things have been
Yeah.
done. But as far as systems go, probably the number one thing I did was to embrace a CRM, and I chose HubSpot. I just love HubSpot. And then that automated my sales pipeline, and I
Yeah.
ran as seriously as my business partner managed the client list of like which returns are filed or not. If you treat sales the same way you treat your actual client deliverables, you will instantly double your sales. And then I went one step further after failing to implement a practice management system I won't mention. We set up HubSpot to manage our pipeline of tickets of our client work. So if I sold 4 projections and a tax return, that was 5 tickets, and that became 5 jobs to be done. And I'm very much a Deming philosophy guy where let's have just in time, let's make sure that we have things tracked in a Kanban board style and visualize it and collaborate on it. And just using a CRM will infinitely expand your capacity because it doesn't totally depend on me having to document things in a certain way for somebody else to be able to collaborate with me.
Yeah, anytime you can set forth, what do I want to call this? A workflow, I guess,
Yep.
and establish something that is wash, rinse, repeat.
Mm-hmm.
It saves you mental capacity, but also like
Yes.
gets you to a point to hire.
Mm-hmm.
One of the entrepreneur books I love is The E-Myth.
Me too.
And he talks about you as an entrepreneur need to delegate. And you
Yeah.
do not need to delegate at the same skill level as yourself. You need to delegate at entry level.
Mm-hmm.
That makes it affordable for you as a business owner and provides an opportunity for someone.
Mm-hmm.
Small tangent, but I actually want to pivot back to a few things because
Sure.
here I asked you about systems, rhythms, all of those things. Part of the reason I did was because you were saying a buzzword for me that I feel like not many accountants know how to replicate or see the importance of, or maybe it's like the pie in the sky and they're like, tell me how to get there. And
Mm.
that's recurring
Yes.
revenue. And we've also talked recurring revenue in the same time that we've talked about taxes, which is seasonal. Unpack
Yeah.
that for me. How are you creating recurring revenue?
Yeah. So this sort of goes back to even the first question and what I love to do with firms, because as much as I love working in tech and doing sales and accounting tech and fintech, there are things I just don't like about it. And so I basically am trying to bring all of the best ways of thinking from there into traditional firms. So one of them is recurring revenue,
Yes.
right? It's upsetting to me in most tech firms that if I sold a recurring revenue project for $3,000 a month and then I sold $100,000 catch up, they don't actually care about the $100,000 catch up. When I'm a bootstrap business, that's amazing. That I'm more excited about that than $3,000 a month. So this idea that we're able to have revenue recur over and over in something that we think is once a year, I think is just wrong. Why? Because we pay subscriptions for everything. It's just the way our economy is going, for better or worse. I understand there are downsides to
Yes,
it.
agreed.
I think the biggest thing that accountants do to undercut themselves is not valuing the quarterly projection. People want so much assurance that if they owe money, and I'm talking people who are profitable, so usually like a Schedule C or S-Corp, then you have the reasonable comp on top of that. That's now on an S-Corp, that's 6 touch points, the personal tax return, the corporate tax return, out of order, and then the 4 projections, and the projections you could break out into a salary review as well as, we might have my cat come help us here, the salary review as well as a projection. So what that means is they want to know, how much do I owe?
Yeah.
As accountants, we're overwhelmed with work, we undercharge. And so what do? We just say, here's the number from last year, give them the safe harbor. As long as you pay this, you should be fine. Well, that's kind of like a CYA from an accountant's point of view, in the sense that we're not going to get in trouble as far as having the client owe penalties. I love you, but not right now. Okay. So the penalties certainly matter, and we should avoid them. But what the client actually wants to know is, how much do I really owe? Real-time bookkeeping and real-time taxes are sort of fictional right now still. Maybe there's going to be a change in that. But even if you just get the prior quarter and do a projection based off of that into really what they owe, and you work with them every quarter, now all of a sudden somebody paying you quarterly is not out of this world. Then if you start doing bookkeeping with it as well, monthly, and then you just lump it all in together. The thing behind this, it really was a huge part of my success, was choosing a system that automated the proposal, the e-signature, the payments, and the invoices. So, there's a couple out there that are really great, and, many practice management platforms also have that embedded in. If you are still using a PDF to PandaDoc and QuickBooks invoice, it will help you save 40 hours a week for 2 months if you just embrace one of those systems. And it's amazing. It's
Seriously. The
life-changing.
ROI, if there's sticker shock at all,
Yes,
or
exactly.
one of those systems, stop.
Yeah.
The ROI is there.
Mm-hmm.
There's a principle. So I studied economics in my undergrad, and there's a principle that I love from econ called opportunity cost.
Yes.
And it has been this what's undercurrent throughout my adulthood now of like, is that worth the trade-off of my time? I remember my professor giving the example of mowing the lawn on a Saturday. He's like, yeah, I can do that. Or I can pay the 10-year-old down the street $20 to do it.
Mm-hmm.
My time is more valuable. And what would I trade my time for instead of mowing the lawn?
Mm-hmm.
What would I
Yeah.
trade my time for instead of doing this proposal manually?
Mm-hmm.
And the thing that I love about the way the industry is moving is I feel like it actually really is fully supporting an accountant to get into the parts of their job that they talk about the most and love the most. And that is
Mm-hmm.
their client relationships and maybe even their work relationships. It's the human connections. It's the
Mm-hmm.
enabling of people to succeed in their lives. People can be good with numbers and love that as well. But do you want to slog through it, or do you want to use tools that are really
Mm-hmm.
efficient for you
Yeah.
so that you can get to these more meaningful interactions and maybe even strategic
Mm-hmm.
things? And I will go back to Clifton Strengths here for a second. If you're unfamiliar, there are 4 categories. I'm going to look it up really quick because I always forget one.
Yeah. I and some of them.
They are executing, influencing, relationship building, and strategic thinking. So funny thing, relative to like what we talked about having compliments, I want to believe 4 of my husband's top 5 are strategic.
Mm-hmm.
And he has 0 executing in his top 5.
Mm-hmm.
And I have lots of executing. I think I have like 3 executing and 2 relationship building. Whether you're
Yeah.
saving that time to then lean
Yeah.
into relationship building or strategic thinking, whatever your passion is, I know like I want to be strategic. I'm not. My husband is though. But like
Mm-hmm.
I would, if I'm to put myself in an accountant's shoes and I'm able to free up my time, that opportunity cost,
Yeah.
I know who I am and that I would love more time with those relationships. Like whatever it is that you want more of, you can have it if
Mm-hmm.
you use the right systems and lean on technology. Yeah.
Yeah, I think another way to say the same thing is, what's your highest and best use? What's the one thing only you can do? And
Yeah.
you should really outsource everything else. Again, this goes back a little bit to, being bootstrapped or having your own profit required versus being venture backed. But, even one thing I notice a lot is the penny wise and pound foolish people who are playing not to lose instead of playing to win, right? So playing not to lose is this idea that I'm just going to save $20,000 on not using an automated system and I'm going
Yeah.
to allow it myself. But if I spent 2 weeks in the busiest time of the year, which is the best time to get clients, I could probably make more than double that.
I love that point. Okay. As we wrap up, I would love any hot takes you have on venture and PE right now, too.
Yeah. I like to joke that I have friends in both. And I do. So I certainly don't think they're evil. It certainly changes the whole landscape a lot. There are a lot of accountants there. We're in the middle of the baby boomers all retiring. So there's this huge surplus of firms that are, paper full and, archaic systems and needing new ownership, leadership. So it makes sense. And it's also a recurring revenue stream. Tax is recurring automatically. That's music to investors' ears, right? Most of these smaller firms, and I never went Big Four. I did audit for a summer in college for Eide Bailly in Denver. I really loved the people and enjoyed that, but I'm just not cut out for that kind of work. It's a pyramid scheme. You work your butt off and you either become partner at some point or you don't. And then your reward for becoming partner is you work more. And now you may not even become an equity partner. And now if you're part of Moss Adams and Baker Tilly, you totally had your whole worldview change. So that's why I'm so passionate about the entrepreneurial accountants and building the firm that they envision. Build the firm of your dreams is a bit cliche to say now, but I believe it. What are you optimizing for? The reality is PE can help you acquire a firm. PE can help you sell your firm. And the neat thing that I've been able to do with some of my current clients is, both of the CEOs are not near retirement, but the idea is they would be open to selling, right? And the idea, regardless, at some point, like the business has to be transitioned at some point. It's
Yeah.
just like having a good operating agreement with your business partner. Decide now how the partnership is going to end because it is going to end, and it's better to decide while you're happy than when you're not. So the same thing for succession on your business. Are you going to hand it on to a family member? Are you going to sell it to your employees? Are you going to sell it to PE? And for a lot of these baby boomer style firms, or even not, like they are lacking systems and processes. And the reality is, if you set up some of these process first and system, if you set these up, if you're not wanting to retire, maybe you're just overwhelmed. Maybe you realize that the business isn't actually that overwhelming because you've set things up in a way that's more scalable. That doesn't mean you have to sell. It doesn't mean you have to scale. It just means that you have a way of working the systems that run your business.
I love it. Any parting words that you'd like to share?
I mean, my hottest take is I don't think accounting firms should be building tech. Like there are so many great AI tools out there for
Do you hear
building.
a lot of firms trying to build their own tech?
Yeah, it's becoming more and more,
I
especially
hear
with
it
cost.
occasionally, but I didn't know it was that
Yeah.
popular.
I mean, I think there's so many good reasons to partner with the innovators in the current industry. And the nice thing is, if they don't work out, you just have a different one. And maybe there's pain in the transition. And it is exciting to be able to build something yourself. But I think what I've seen a lot of down the road, people forget that software has to be maintained. So
Mhm.
even if you get it to a certain point, it then becomes an expense, a recurring expense. The
Yeah.
recurring expense bad, recurring revenue good, right?
It's not like a desk. You build it once and then you can use it. You do have to, yeah,
Maintain it. It's a living, breathing thing.
it
So
is.
that's my hot take.
I love it.
Use
Well,
use industry leading software.
yes, I appreciate that. I just didn't know it was a trend. I hear it every now and then, especially for like a CRM. And I'm glad you listed off a CRM first as one of your tools. We could go into that all day long. I mean, we use
Yeah.
HubSpot at Canopy, and as a marketer, like I know the value of that
Yeah.
specific kind of a tool. And I lean on my colleagues who are marketing operations and our demand generation folks to kind of
Mm.
understand and leverage things and positively impact our business. But yeah, if you do not have a CRM, that's like pretty foundational.
Yeah. My joke is there's name the top of most of the tallest buildings in every city is Salesforce for a reason, you know?
Interesting. There you go. Okay, Luke, it was a pleasure. Excuse me. Thank you so much.
Thank you so much.